and they invest in different series and different stages of startups from seed until Series A. I'll be passing on the floor to Sarah Daniel, who has just recently became the CEO of Doha Tech Angels, and she'll go over their investment and what was their experience in the past 3 years.
Thank you. Hello, everybody. I'm very happy to be here. Sorry for this. I'm just going to go ahead. So I'm very happy to be here. Thank you for having me this morning. And I'm going to be talking to you about the venture capital market in the region and in Qatar. I'm going to first start by introducing myself and Doha Tech Angels. So my name is Sarah Daniel. I've been working in the venture capital space for the past 10 years. And I recently joined Doha Tech Angels, which is a Qatari-based angel fund that invests in technology startups, early stage technology startups. So DTA was launched in 2018, which was one of the pioneers in the market in terms of angel investing and investing in early stage startups. There are 15 founding members that support this organization. We invest in seed and Series A rounds. And our investment tickets ranges from $50,000 to $250,000. And that's our first ticket. We can also follow on the investments we make. In terms of our investment strategy, so we invest in ready-to-scale startups. So startups that already have a product in the market, so already have product market fit, that they have that initial traction and that are ready now to scale. In terms of geography, we don't have a real limitation. However, we are Qatar first. We're focused on Qatar, GCC, MENA, and South Asia. So we have a few investments in Bangladesh or Pakistan as well. In terms of industry, across technology, so anything that's tech-enabled or has a tech layer is something that we would be interested in. And finally, in terms of business criteria, anything with the right business acumen, right? So we're targeting large markets, we're targeting scalable business models, strong teams, and a clear competitive advantage with also a clear exit strategy, because at the end of the day, we need to be redoing our return on investments. So this is our portfolio to date. We have 9 companies in the portfolio that we've invested in the past 3 years. And you'll see that some of them are Qatari, like At Home Doc and Jubi Health. But we also have investments in Bangladesh, ShopUp, we have Dubai, Yalla Market, Ola Doc, which is in Pakistan. So pretty diverse. Now I'm going to be talking to you about the venture capital market. So when you're looking at startups in the startup market, one of the easiest ways to size the market is to look at how much capital is being invested inside these companies. And so that's the venture markets. And we're going to start by looking at the emerging market venture market. And in that sense, we're looking at MENA, but more than MENA. MENA, we're looking at Turkey, Pakistan, Africa. So these are like emerging markets for venture markets. And you'll see that there's a very steep increase in the amount of funding that's going to early stage technology businesses. It's an unprecedented surge of capital that's going in. We have $6.9 billion that have been invested in early stage technology businesses across these markets. And then I think another interesting fact is that the leading industry is Fintech, which is also what you'll see a common theme. Now, if we zoom in a little bit more and we look at the MENA market, so we're now only looking at Middle East and North Africa, and you'll also see that there is a very similar pattern. There's a huge uptake that happened in 2021. It's obviously COVID-related. After COVID, everything went online. Digital was finally embraced by all different facets. So you'll see that increase in funding. The most active market in the MENA region is the UAE in terms of both the number of deals that have been made, but also the amount of capital that has been invested. And you'll see again, so the leading industry remains to be Fintech. And then now we're going to zoom in into what's happening in Qatar. So these numbers have been published by a study that was done from QDB and Magnet. It's a very interesting publication that started in 2020, and now it's the second edition. And you'll see that we have an increase in terms of the amount of money that's being invested. And here we're talking about Qatari riyals, whereas in the other 2 slides we're talking about dollars. However, despite this small increase, if you look at the share compared to the MENA market, we are less than 1%. So basically, the amount of money being invested in startups in Qatar represent less than 1% of the amount of money that's being invested in the rest of the region. And other things that are interesting to look at is, so the leading industry remains fintech, which is the same across all three markets that we're looking at. We have the share of investment that is coming from accelerators, which are basically institutions that are usually government-backed to promote startups. It stands at 46% in Qatar, which is huge. The region, as a benchmark, is 16%, which means that most of these investments are coming in from accelerators and are grants, so as opposed to private investors, venture capitalists, and family offices that really believe in this asset class. So that's a little bit about where we stand with Qatar. In the entrepreneurial ecosystem lifecycle model, there are 4 different stages. First stage is activation, is when you're starting to create this entrepreneurial ecosystem, and this is really where Doha stands today. The next stage would be globalization. So activation is where you're promoting startups and your focus is to create and to produce as many startups as possible, to really, and to provide them with early stage funding, changing the mindset a little bit. As soon as the entrepreneurial ecosystem develops, you start getting into globalization. Globalization is basically when the startups that you have, that were created in your market or in your cities, start to develop abroad, start to grow outside of your markets. Okay, and so really become global players. The third stage is attraction. Attraction is when your city is so well known to be to help startups grow that startups actually come to your city to start. So basically, founders are attracted to your cities so that they can start their business. For instance, Singapore is a very good example of that. Startups all around Asia, actually, founders, they move there before they even start their business. And so eventually, that's what we're trying to get to. So Doha is in the activation phase, which is normal, which is most of the cities in the region are still in their activation phase. The focus right now is really to produce as many startups as possible and to provide them with early stage funding. So DTA and Jubi Health, one of our portfolio companies, together we conducted a small study. We reached out to different startup founders and to different stakeholders. We did one-on-one interviews with stakeholders, and we sent out a survey. So this is a starting sample. And what we were trying to do is to evaluate what were the strengths and weaknesses, what were the challenges of the startup ecosystem in Qatar based on across those 5 pillars. These 5 pillars are really important in enabling startups to grow. So one of them is infrastructure. Obviously, you need to have the right infrastructure, the right internet connections, etc., in order to enable startups to actually exist and grow. Capital, access to capital is the funding. Talent, and markets, we split it in 2. So access to markets, we split it into B2C markets, as in business to consumer, and access to B2b, B2G, business to business markets, business to government markets. And in terms of regulation, which is also a huge and very important pillar of the startup ecosystem, we also split it into 2. One of them being the ease of doing business, so how easy it is to start a business, the cost associated with starting a business, versus reforms that impact innovation, and reforms that are important to enable innovative businesses to grow. So our starting sampler included 10 startups, 2 incubators that are across several technology sectors. So we went from fintech, e-commerce, sports tech, transportation, health tech, to try to cover as many facets as possible. We looked at companies that had different sizes, so from startups that had 5 employees to startups that had more than 100 employees, to try to really cover the most possible. And the founders that we interviewed also had, half of them were local founders and other half were actually foreign founders, to see if there were the same challenges across both groups. So this is a bit of the findings that we found. So we asked them to score the different pillars and for their actual their feedback on what was challenging. The interesting thing is that infrastructure, relatively to the other pillars, scored the highest, which was expected. So we at Qatar, we have good ICT infrastructure that is ready to really propel companies forwards. And also as part of infrastructure, there's a very rich and diverse accelerator programs that enable startups to start, to actually launch. And those include incubators and accelerators like I think QFC has the Qatar Sports Tech, there's the Fintech Hub, there's Cubic, there's a Doha Incubation Center. So there's a bunch of those. And they're there's a variety. 2, their programs are very rich and are world-class. In terms of capital, it was a bit mitigated. On one end, you have access to capital that enables you to start. You have access to grants. You have access to accelerators that provide capital. But after that, there's a gap. Once a company starts and creates their product, for them to go to market, they need to start commercializing, and they need pre-seed rounds. And this capital is missing. Further ahead, companies that have actually been able to raise their seed rounds are now stuck. They're unable to raise their Series A, Series B rounds, the bigger rounds, $3 million, $5 million. They're unable to raise that kind of money inside the country. So also, it was mitigated. In terms of talent, we also had those mitigation, and so the score was 2 out of 4. Basically, on one end, we have access to junior talent that's affordable. We have a lot of graduates from really good universities that we can have access to. However, it's really hard to find specialized talent. Specifically that for technology, there's a lot of tech talent that you need. And they're deep tech talent. And this talent is really hard to find. And the migration laws limit this access to these kind of talent. Just a point there, in the entire region is suffering from this. So it's not something that's particular to Qatar. All countries of the Middle East, North African region have a lack of deep tech talent. So this is the section where you had most of the challenges. So that's where we focused and we started to dig deeper. Because at the end of the day, all of these pillars are related. So if you focus on what is the biggest challenge, it will enable the other pillars to move more fluently. So those two enablers, pillars, let's talk about market first. In markets, we separated B2C and B2B. So for B2C, business to consumers, the feedback was that it is, in general, a very good market. It is small in size, and that's the biggest limitation. But other than its size, the consumer market is they're diversified. They have high purchasing power, and they have sophisticated demand, right? So the B2C market, other than its size, is an actually good market to reach out to. The B2B market, which are basically if a startup or company is trying to sell its product or solution to another company or to a public institution, and this is where the companies were struggling the most. They're basically saying that this market is non-existent for small enterprises, that the procurement processes for those corporates and public institutions are just not adequate to startups. They don't qualify as a startup. So this is a very big point that we're still working. This is still a work in progress, and we're still working on this, but we're really trying to find ways to help companies commercialize in the B2B space, which is a huge space, which is the biggest market also in Qatar. Finally, in terms of regulation, which was also split in both, the ease of doing business was ranked okay, in the sense that QFC has really improved this. So everyone was talking about how easy, how transparent, how QFC has been. However, it is on the expensive side for the early stage startups. In terms of innovation reform, and this was really spoken of very strongly from our Fintech startups. So the Fintech startups were struggling with the lack of clarity in terms of regulations when it comes to reforms in this space. Okay, so this is about the startup ecosystem in Qatar, and I'm really looking forward to questions about this, about the Qatari ecosystem and the challenges and strength there, and I'd love some feedback. And if anyone online have any questions, please do comment so that we can have a discussion about this. But I just wanted to end with one last idea. And I wanted to zoom out a little. And the idea was that why is this so important now? Why are we seeing this uptake in investment? And why is it really important that we solve the challenges for the startups in Qatar today? Because we are in a time where it's growing exponentially. We really are at an inflection point. And the reason why we are at that inflection point is because on one end, the series of successful exits that came out from startups in the region it has really brought in credibility to this VC class. So when investors invest in startups, they make their money when there's an exit. And it takes time to reach exits. But now, in the MENA region, we've reached those exits. So in 2021, we registered 35 successful exits. In the first 2 months of 2022, there were already 12. This brings a lot of confidence to investors, and this makes investors want to put more money into startups, which is why now is the time to fix the challenges so that we can also benefit from this momentum that's happening. And the other thing that's happening is that we're finding global investors that are usually just in Silicon Valley. They have offices in the region. They are actively looking for companies in the region to invest in. And so here you have global investors from the US, from Japan, from China, all over, from South Africa. They all have offices now here, and they are scouting the market for companies. So this also brings a lot of confidence, and this is why we're seeing so much more money being drawn into this. The last point why I think that it is an important time for startups today is because we're seeing cross-pollinizations between markets. We're seeing companies in Saudi acquiring companies in Jordan. We're seeing companies in Africa acquiring companies in Qatar. And this as well is really, really comforting for investors, because then the investors start having a more consolidated position. They become, the businesses are more consolidated. It's also very interesting. And we're seeing a bunch of those. These are just a few examples that I was able to pull out. So that was my presentation for today. I hope you found it interesting. I'm looking forward to questions and for us to have a dynamic conversation after this. Thank you very much. Do you have any questions for me? Anything at all would be good.
Hi, I'm Dinesh. I'm from DeepSea.
Okay.
We are a payments company.
Yes.
We accept payment behalf of the customers, and we are a B2b company.
Yes.
So being a partner of your company, rather than the money, so what value added you bring to the team?
As DTA, you mean Doha Tech Angels? Okay, so DTA's founding members are basically the value add of DTA. I don't know if you've known them, but they're really very successful business people that have strategic networks and a lot of insights to share. So having them on your cap table adds a lot of value. Other than that, we're not active investors. So DTA does not take a board seat on the investments they make. We're not active investors. However, we are fast in our decision making, and we are patient with our capital. So we're not impatient to sell, which also is good for the companies that we invest in. And we try as much as we can to add value to the investments we make. So lately what we've been doing synergies, connections across portfolio companies to help them grow better, especially that a lot of our companies are spread across the region. So for instance, we have health techs that are in Qatar, and we have health tech that are in Kuwait. We'll put them in touch. Things like that we've been proactive on. One of our corporate companies launched a corporate program and needed business development networking in Qatar, something that we do. So these are the things that we are building as the DTA to add more value to our portfolio companies. Yes?
Question actually about one of the slides when about the Qatar market, that it has less than 1% total funds like this one. How do you explain actually that we have these numbers in Qatar compared to the MENA region?
Okay.
Is this a problem? I mean, is it a problem of capital or startups? Which side?
Can you ask me to repeat the question before answering so the audience can hear the question?
Okay. So the question that was asked to me right now was to explain how do we explain the low amount of funding that's happening in the Qatari market as opposed to the region. I think it's not one explanation. I think it's both-sided. On one end, there is a lack of sophisticated investors looking at the space. So this is an answer to you. All of the investment is coming from accelerators and government grants. These are not investors. So there aren't any investors looking at the space in Qatar. So that's why there's a lack of supply. On the other end, the startups that we're seeing out of Qatar are having a hard time accessing markets, which is also part of the problem, right? So if you want to be enticing investors and being able to raise larger rounds, you need to commercialize. If you're doing B2C, you can start commercializing, but it's a limited market. If you're doing B2B, it is very difficult to commercialize. So I think that's also one of the biggest challenge. And that's why I was saying that the pillars they're related. if you solve the access to market for the startup, then you will also be solving the capital, because investors will be much more prone to invest when they see a company that's sold 2 or 3 products to QNB and Uridu.
In your opinion, if we have to solve one of the problems that you have raised in the next slide,
It's this one.
which one?
The access.
The access to market.
The biggest market in Qatar and the most sophisticated market in Qatar is the B2B and the B2G market. If we're able to let those startups that are, don't even think about going outside. If you're able to let the local startups grow in these segments, then this is the biggest problem to solve. But this is my opinion and not necessarily
I share.
Doha Tech Angel's opinion.
Can I ask you a follow-up question on this? My name is Fadi Sab. I have a Nebix at QFC, but I'm also very interested in the angel investment scene. You mentioned that there's very little angel investments in Qatar. Why?
Back to the same point. Because there are two things. On one end, there's a lack of education about what angel investing is, and so people don't really know, and the investors in Qatar are more used to investing in real estate or things like that, and it's a very different investment theme. So it takes a bit of time to get people to be accustomed to this. But also, the startups that we're seeing in Qatar although they have great accelerator programs, but they're not getting to a stage where you're seeing a lot of traction. And even for an angel investor, when you're looking at a business, if it's just a product, it's difficult to invest, even for an angel investor. So you need to see something. And it's hard to have that proof of traction today in Qatar. And that's why I'm saying that I think that addressing the problem of access to markets would be a very big, it has spillover effects on all the other segments.
And don't you think that the network will solve that by having entrepreneurs, startups with money coming from angel investments and pre-seed investment companies and government regulators all in one place? Why don't we have this in Qatar yet?
What do you mean in all in one place?
In a network, in an association.
There is, yeah. So there've been several initiatives to create an angel network, for instance. I don't know, to be honest, I don't personally know what happened. I know that the QDB was developing an angel network. Doha Tech Angels is not really an angel network, it's an angel fund. There's 15 founding members. But I don't know what has been happening, what's the effort and why it stopped. But it's definitely something that we should be moving towards more.
We have two questions from the audience. One is, what is Qatar's competitiveness in attracting startups in comparison to Dubai and Saudi Arabia region? Just that one first.
Okay, sure. I think that we shouldn't be asking these kind of questions. At the end of the day, startups that start in Qatar, I can give you a very marketing answer and say, if you have access to the B2B, then that's your competitive advantage. You have in Qatar world-class organizations. You have one of the best airports in the world, one of the best airlines in the world, one of the best telecom company in the world, the biggest bank in the world. So there's ways to say these things and say that is our competitive advantage. And I think that also part of QDB's effort in creating Qatar sports technology was part of that. They picked subsectors where Qatar would have an advantage, and sports is one of them. But where it's lacking is that after that effort, there is no commercialization. So we're back to the same point. But if we're able to execute that strategy, then that would be our competitive advantage. So that's one. The second thing is to say is that we don't necessarily need to be attracting startups from outside of Qatar to come to Qatar. That's the next step. Let's enable the people that are in Qatar to create businesses in Qatar. There are lots of things to do here. There's a good demand, and it's not like it's flowing with supply. There are gaps in the market. So let's just focus on that, and then we'll see.
So there's another question from the audience as well, which is, are there any initiatives from the government to resolve the talent issue, and is it due to immigration laws?
I wouldn't, sorry, apologies, but I wouldn't be able to answer that question. All right.
Do you, as Doha Tech Angel, intend to increase your capital base and your level of
Yes.
activity? And
There are
so
plans for that.
at what pace?
There are plans for that. I recently joined the DTA, so it's still in the initial stage of that, but there are plans to grow the fund and to have a larger network of angels as part of
And
it.
are you linked to other funds who co-invest with you?
We are, so there are several things. We have relations with other angel funds in the region. So for instance, with Dubai angel investors and Saudi angel investors, whereby we are always in contact and we share pipeline and things like that. And also we do pitch nights every month where we invite startups to pitch. And they're relatively public events. So we invite people from different networks, and the people who attend, if they're interested in following DTA's lead, they also co-invest alongside DTA on the same terms as DTA. So we do that as well, which also enables us to enter at higher tickets with the startups that we invest in.
If you could just mention live on the microphone, if anyone wants to reach out to you, what's the best way?
Yes.
Instagram?
Sure. If anyone wants to reach out to me, please reach out to me on my email address. I wanted to add it to the slides, I forgot. So it's Sarah, SARA, @dta.qa. Thank you all very, very much.
Thank you, Sarah, for giving us the insights on DTA's strategy and what has been accomplished with DTA. And it's interesting what we have seen regarding Qatar's ecosystem. And hopefully we can solve some of these challenges. And it's nice to see DTA joining us for the second time since our first Tech Talk was with Marwan, one of the founding partners. And thank you all for joining us today, online and physical. Thank you, everyone.
That's fine, let it cover the networking. That was great.